The main markets in the past session had a choppy ride, but all sectors ended up 0.3% up. The best sectors, information technology and communication services. The worst hit, utilities and energy. You can see the sector performance playing out on the stock market heat map. Energy was hit and also the banks were going down. The crypto market, in a flight to safety from the banking system's systemic risk problems, did quite well. A lot of people are mystified by the crypto market. When you actually learn the rules of the crypto market, that you'll see that it follows the stock market, and I'm going to prove that out to you today. It was a volatile day for the Nasdaq, the S&P 500 and the Dow. I'm going to drill into this a little later to show you underneath the hood into the engine of the stock market. The Bank of England raised its base interest rate by 25 basis points following the Federal Reserve. Inflation is surging all around the world. The central banks really have a very blunt policy instrument. They can only raise interest rates to destroy demand, to bring demand back into association with supply. The Swiss National Bank, the central banks of Norway, the Philippines and Taiwan also increase their borrowing costs. Crypto tends to make the headlines for all the wrong reasons. Crypto fugitive Do Kwon is arrested in Montenegro. The Wall Street Journal did an expose on the crypto crisis, a timeline of key events, and here we see Sam Bankman-Fried, but we don't see the association with Gary Gensler. Gary Gensler and Sam Bankman-Fried met many times. Diversion from this close association has led to the SEC's chair cracking down on crypto. There's nothing like diversion when you're under the spotlight. Government agencies are trying to protect the banking system, and what are they protecting it from? An outflow of funds. There's systemic problems in the banking system all across the world. More problematically, because of the Fed raising the federal funds rate, pressure is being put on the economic system and job cuts are inevitable. Accenture trims forecast to cut 19,000 jobs as IT spending slows. This follows Meta Platform Inc. cutting 10,000 jobs just 4 months after it let go of 11,000 employees. IBM said it will lay off 3,900 employees. Spotify is cutting 6% of its workforce. Alphabet is eliminating 12,000 jobs. Microsoft will cut its jobs by 10,000 by the end of the third quarter of fiscal 2023. Amazon, Intel, Twitter, Lyft, Salesforce, they are just some of the names that are firing their staff. Many thanks to Oscar who shared this link, layoffs. For your information. So far in 2023, tech sectors have laid off 152,858 employees, and that's just January, February, March. We can see that a lot of company layoffs happen around January. There is a structural shift going on in the US and in advanced economies. US companies reshored 364,000 jobs last year. You can see reshoring jobs are increasing as remote industries that were once outsourced to China, India, and various other parts of the world are being brought back within the shores. This has led to a very strong job market. Unemployment claims were a mere 191,000. When you think of the economic devastation of 191,000 people claiming unemployment, it's just heartbreaking. We can also see that new home sales came in lower than anticipated, 640,000 versus the expected 650,000. In 41 days, there will be the next FOMC meeting, and we're already seeing a 35.3% probability of a 25 basis point increase in the federal funds rate. We are entering a period of economic and market volatility. If you're an investor and you don't know how to trade, I would suggest you learn. It's going to be really important. And I'm going to share a new indicator with you today that can throw light on market turning points. We remember Rule 138. All investors become traders anytime they buy or sell. Buying effectively and selling effectively should be at the forefront of investing focus. Traders have a very specific mindset. They know they control the trade or investment, but the market controls the return. And that's based on their active learning, their knowledge and courage, and also their synchronization with the market. That's why we do our CTKS code each day. It's our daily three-dimensional risk management. A lot of people wait for a melt down or a melt up and say, what do I do? We say, what do we do each and every day? What do we do if the markets tank? What do we do if the markets rally? And what do we do if the markets go nowhere? We're always asking this question. If you look at a mainstream media news headline such as stocks closed higher in a volatile day, you wouldn't understand the market structure that's related to this price momentum. Or if you just looked at a naked S&P 500 chart, oh, how naughty. A lot of people think that technical analysis is just looking at tea leaves. They are wrong. Smart money has a very specific way of looking at the markets. They know when to step in and buy and when to step out and sell. There are now algorithms that do the buying and selling, and they're based on key signals that the market throws. What is the S&P 500 doing right now? People who have studied the CTKS method know exactly what the market is doing. They don't see this, they see something entirely different. They see this. And what is this that they're seeing? We can see that the S&P 500 is still under an area of resistance. There's a higher area of resistance that the S&P 500 has been rejected from. What does this actually mean? It means the sellers are coming in and exerting their weight. But note also that the CTKS method shows that between 38.78 and 39.39, there's incredible buying strength. And this is actually why the S&P 500 has not broken this resistance. What we're looking at here is a lack of understanding inside the market as to the direction of the S&P 500. But we can tell it's already under resistance. It's literally sitting on a support level. And it's also sitting on a mass of smart money buying levels. The market is very, very unclear as to what to do. That's why I actually invented another indicator yesterday. This was actually inspired by Art's kind comment. Art said that Ken is always inventing new ways for us to look at the market. And I was inspired by that, Art. And I thought to myself, how can I help people to see where turns in the S&P 500 could actually originate? As traders, we always need advance warning, so that's why I created the CTKS Leading Risk Indicator. This is work still in development, so I'm not releasing this yet. From the analysis that I did, this indicator is really quite good. The risk indicator here is in purple. This white line is the S&P 500. You note that the S&P 500 came down. The indicator realized that that was on the cards. What are we seeing right now? A little bit of negative momentum, but certainly not cracking the support level. That means that risk on is still inside the main markets. But how good is this indicator? It's actually really good. When we look at the bottoming action here, we can see that the indicator bottomed out first and its rally up showed that the market could continue up. Is this always going to be 100% accurate? Of course not. No indicator could ever be. It's just a stacking of probabilities, and that's what we do as professionals. It's just another tool in your toolbox. We can see that the indicator can give a bit of a confirmation signal, but believe me, it's not always accurate, but it is something that you can look at, something that can help. And I'll be sharing and refining this indicator as time goes on. What about this particular rally in the S&P 500? The indicator was already selling down before the peak of the S&P 500. This gives you about a week, around an average of about a week in terms of a forward. In this particular case, it was a little over a week and a half, but what you can actually see, the risk indicator was coming down as the market was flattening out. When you use these two things in combination, it can be quite powerful, but you must realize indicators are not laws. They're just on average behavior, on average volatility. The one thing that we saw, this indicator is quite good in terms of pinning bottoms. It shows where the indicator is bottoming out and price momentum could actually reverse. In all, I think this is a very, very good contribution to financial knowledge, but I'll keep refining it and I'll keep sharing it with you each day as well. A lot of people simply don't understand the relationship between Bitcoin and the stock market. We have a rule for it, Rule 225. Bitcoin cannot escape the stock market's gravity. When you look at Bitcoin, it can give you an idea of where the stock market could be going. A lot of people will look at Bitcoin's price action like this and try to determine from recent indicative price where Bitcoin will find support and find resistance. We don't do that with the CTKS method. We draw our lines across all of price history to understand where smart money sees the buy and sell levels. When we look through the CTKS method, we look like this. The CTKS method is composed of SLs, SCs. SLs are Stanfield lines, SCs are Stanfield zones, and we can see that with the recent sell-off in Bitcoin, Bitcoin came down to a SC. And this is why the SCs actually exist. They're there to try to explain where market structure actually is. You can't find this kind of analysis using normal averages. If you look at an average, for example, a simple moving average or an exponential moving average, an SMA or an EMA, that's just on average price behavior. When I was teaching my students in first and second year statistics, I explained an average like this. Put one arm in the freezer, one arm in the fire, your average temperature. Welcome to averages. We can see that Bitcoin had again challenged the 27,843 to 28,380 smart money sell level, and it's now trying to turn it into a smart money buy level. If it does so, we can expect the S&P 500 to rally. We always have our three-dimensional thinking. The next major resistance is from 29,930 to 30,221, and Bitcoin is currently 28,197. The CTKS method absolutely excels at sell-offs and rallies. We've seen this time and time again. We saw it recently with gold. We saw it recently with XRP. When you know these smart money lines, it makes trading and investing a whole lot easier. A lot of people in the crypto industry do not understand the relationship between the stock market and the crypto market. They think the crypto market is independent. Unfortunately, it is not. And you might say, Ken, prove it. Okay, I will. What we're looking at here is the S&P 500. Note, when the S&P 500 sold down traumatically, what did Bitcoin do? It also sold down traumatically. And what happened when the S&P 500 started to come up? You can see it. It's playing out before your eyes. And we do this each and every day. And long-time viewers know the association. But many people in the crypto industry looked at the big sell-off in Bitcoin and said, what happened? The stock market happened. And if we understand Rule 225, we don't make this mistake. Another thing to keep your eye on is the Bitcoin longs and Bitcoin shorts. Why should you be doing this if you're only interested in the stock market? Because you can actually lead to predictions on where the S&P 500 is going. And if you know where the S&P 500 is going, you know where your beloved stocks are headed to. And of course, Bitcoin in the crypto industry controls all cryptos. If Bitcoin sells off, 99.9% of cryptos will follow that lead. This chart is shared inside the masterclass, and we can see the price came up and price came down. What do we expect from liquidations? We can see that the longs are lacking conviction, they're lacking confidence. They've seen all the negative news and they're coming out of the market. What are the shorts doing? Well, they popped into the market and then they got liquidated. So let's have a look at total liquidations. Across the past 24 hours, there's been 205.75 million in total liquidations across 47,365 positions. And if you're wondering, how on earth do I avoid liquidation? Just don't use leverage, just go buy spot. That's what we do. And when we look at total liquidations in the past 24 hours, we see 58% short. What about the past 12 hours? 59% short. What about the past 4 hours? We would expect it to be long. Let's have a look. Yes, around 67% long. And what about the past hour? About 67% long as well. You can actually tell this in the charts by looking at it. And if we scroll down and have a look at total liquidations, we can see that more shorts have been liquidated than longs today. And we're getting a bit of a propelling in terms of risk-on activity. What's happening deep inside the engine of financial markets? The S&P 500 is sitting on a bucket, a steel cage of smart money buy levels. If it loses those smart money buy levels, we may be looking at a meltdown. But if it holds, we could be looking at a beautiful rally. So far, it's holding. All financial markets are intercorrelated and interdependent. That's why I share this chart in TM6 of the masterclass. We can see that the VIX had actually spiked. The markets are a little unsure as to what is going on. The bond market is also unsure of what is happening. Yields are collapsing. Bond prices are slightly doing a tick up. Gold is going for it, and the dollar is also bouncing. There's a lot of stuff happening inside the market at the moment. One thing to keep your eye on, the VIX has not spiked. This is not a spike. And the meditative mind said something really funny. Thanks, MM. She said, Ken just called the VIX a wimp, and I did. The VIX is a lion. It roars. It doesn't just go like this. It goes like that, or like that, or like that, or like that, or like that. We're seeing very atypical momentum inside the VIX. Why are we seeing this? Because of systemic banking problems and the authorities stepping in and protecting the banks. They are deliberately keeping the VIX down. They're putting a lid on the volcano, as George Gammon said. George is such a guy. But one thing we note, the credit spreads, which measure the risk in the financial system, has not dropped off a cliff. It's remaining elevated. So the markets are saying, yeah, you're doing your actions, but I'm not convinced. Oil is also a really good thing to keep your eye on. And what is oil telling us? It's below a level of support. When oil starts to spike down, it doesn't say good things about the economic system. The fact that oil is broken below a level of support and has not even retested it shows economic weakness. As professional traders, we're always looking for timing edges. Anything that helps us to time an entry or exit better is what we're after. We surf the waves of price action. If you were to look at this chart of gold and say where is the support and resistance, you would only be able to use recent indicative price. And RIP, recent indicative price, will RIP your money. Instead, we use the CTKS method. What is gold showing us? It's showing us that it actually couldn't get above the 1980 level back on the 21st. It fell down to a strong smart money support at 1936. It came back up and challenged the 1980 level, but couldn't quite get there before it pushed through. And you see this a lot inside financial markets. The fake out before the breakout. Keep that one in mind. It also applies in the opposite direction, but what we saw is constructive momentum in gold, and it's now come up to challenge this 1988 to 2000 level. There's major resistance between 2014 to 2025. Please be aware of that. And what's this little thing I have here? I got a surprise for you, the inverse S&P 500. Traders always need a confluence of signals. We need to stack probabilities. We don't blindly go into trades. We must know the structure of the market and we must stack probabilities. And just a thing to bear in mind, these SCs on gold have been marked up since 1883. This is definitely not recent indicative price. Anyway, back to the inverse S&P 500. You can see that the inverse S&P 500 was foretelling a rally in gold. A little bit of a weakness, that dropped down, and another rally. It's now pointing to a little bit of weakness. Just bear in mind, these associations, just like all associations, are not one-to-one. The financial markets will not hand you success on a silver platter. You must work for it. And you must gain the skills. I've been in financial markets for more than 30 years, and I do knowledge transfer. That's what everything is about for me and this community. If you want to know how to mark up your charts with the CTKS method, just go to ctksmethod.org. It's also available inside the masterclass. But not instantly, it's an LV video series. These videos are done each and every day to help you to gain an edge inside financial markets and to be more of a financial blessing to yourself and those you love. Gaining real wealth and positive excellence in the process. If you actually just fill out the details on this form, I'll be able to help you more, and that's my solitary focus. Looking at the DXY, you may be very perplexed on the behavior of the DXY. Why did it drop down so suddenly? Without the CTKS method, it's all just gambling, literally, because you just don't know where the structure is inside the markets. And when I say don't know, I mean don't know professionally, at a professional level. Let's put the CTKS method on and let's understand what we're looking at. Between 102.991 and 103.178 was a major support level. When this major support level broke, it wanted to go towards the next major support level. That now has become a major resistance level, and this is how support and resistance interact with each other. The beautiful thing is that the major support was within the 101.656 to 101.800. Price didn't even come down to that. It's not dipped into this particular area. It dipped into this particular area, the smart money buy area above it, which shows that this major support is really major. Without the CTKS method, you just can't see internal market structure. Let's have a quick look at Tesla. Without just looking at the naked chart, we can see that price jumped up and then retested this level through here. Was there a smart money buy area, one sell turning to buy and now potentially turning to sell inside there? And the only way to do this is to mark up your charts with the CTKS method. We go from the start of price history, not just recent indicative price. We're not saying Tesla has only been trading for a couple of months. We're saying Tesla traded from the start of its price history. In fact, we saw exactly that. There was a smart money sell area just here, which turned into a smart money buy area. When Tesla was selling off just in the last 24 hours, a lot of people would have expected Tesla to just fall like a brick. But there was a smart money buy area between 190.47 and 192.18, and that held price. But we're actually seeing weakness inside Tesla's structure. It all comes down to what the S&P 500 is going to do next. If you're not looking at the S&P 500 and you're a Tesla investor, you're making a mistake. You need to look widely. And the best place to look is actually into Bitcoin structure. Bitcoin, as you've seen, reflects the S&P 500, but it can do it 24 hours a day. The S&P 500 just doesn't do that. Apple is perhaps one of the most important stocks that you will ever own or look at. It's such a big weighting in the major indices. It's really important to understand. When we look at Apple's price action, where are the smart money buy areas and smart money sell areas? Do we have resistance above, or is it clear sailing? With the CTKS method, you can find out. Well, let's turn it on. We can see recently that Apple came back into its smart money buy area between 144.64 and 148.15. It tried to rally up to the next smart money sell area, didn't make it, came back to the next smart money buy area, tested again, started to get strength, pushed through, and now it's testing the next smart money sell area, and that is a very strong resistance. You will see time and time again price reacting to a smart money sell level, going down to a smart money buy level, going back up to a sell, to a buy, to a sell, and seeking to push through it. We know that Apple's got a lot of strong resistance between that 161.51 and 165.94. This could have a bearing, in fact it does have a bearing, on the S&P 500. It's all interconnected and intercorrelated. That's why you need to look at so many different charts. Yes, what happens in Apple impacts Bitcoin. It literally takes decades to understand these interrelationships. We have a specific process. We understand what the fundamentals are. We look at checking world events, collecting probabilities, checking the stock markets, because you can see how vitally important it is. Then we pop back inside the market, finding the market's focus, understanding opportunities reset every single day, and enhancing our pattern recognition before we buy or sell. And there's so many ways to do that. We must master emotional control. Without mastering emotional control, you will continuously be a victim of the market. Someone you know has very kindly offered a CTKS partial masterclass scholarship. If you're interested in learning the CTKS method, if you're interested in going on much deeper dives than what we do here, and we can do some pretty deep dives, but in the masterclass, the dive level is 100 times more. You'll find a link in the description that you can apply for the CTKS partial masterclass scholarship. An incredibly important thing is pattern recognition. We understand exactly what's happening up here because we've analyzed Bitcoin's price momentum. We know where the smart money buy and sell areas are. What happened recently? Bitcoin came down. What happened to the alts? They came down as well. When Bitcoin rallied up, what happened to the alts? They rallied up. A question for the comments today. How important do you think it is to track the stock market? Does the stock market give you any edge in crypto? And of course, vice versa. Your pattern recognition is incredibly important to develop. And what we can see here, crypto is very spiky. These spikes you can take advantage of when trading. You only need to get onto the right side of the percentage. What are we noticing with BNB? BNB is starting to come up. It's overcome a level of resistance, but you can see it has quite a lot of short-term resistance above it at the moment. XRP was doing incredibly well. It hit a ton of resistance up here and it's backed away. Let's look into that market structure. When we look at XRP's market structure, it's pretty hard to determine what is actually going on, especially if you look at it from back here. For example, what is XRP actually doing? What is the resistance? What is the support inside market structure? We can answer that question very simply through the CTKS method. We can see recently XRP challenged this particular level of smart money sell area between 39.29 and 4,007. When it got above it, it blew through a very important technical level. This particular level, as I pointed out quite a few days ago, between 43.44 and 44.38 was actually quite pivotal. What did we see as XRP rallied up? It came through level after level after level after level of resistance. And it was always going to be a problem with so many sellers in there. You can get a short-term spike, absolutely. But long-term, it typically has to retrace like this. We were keeping our eye on this smart money buy area from around 43.44 to 44.38, and that has held quite well. When XRP was looking like this, I was pointing out this smart money buy area and saying in all likelihood we could gravitate back to that, because these particular rallies, if they're unsustainable, they have to fall. They have to consolidate before they can keep on going up, especially when you get a technical structure like this. And what actually happened? Well, we can see it playing out in real time. What actually happened? So much resistance, so much overhead pressure that the markets simply had to adjust themselves. And the markets do this all the time. We see this with XRP. We saw it with gold recently. A lot of people think that a smart money buy area should just be bought in terms of it won't go down below it. Of course it can go down below it. It depends how much momentum. It's the same way as a smart money sell area. If you've got a lot of momentum, it will exceed it. And these are good things to keep in your mind all the time. What you're actually looking at is to stack probabilities, as many as you can possibly do. The fact that XRP is getting across that particular level is very, very constructive. And we can see that it's just coming back and retesting. It's overcoming a short-term level of resistance. It's got a lot of support. However, these two levels are reasonably strong. Not as strong as the 43.44 to 44.38, but this next level above is reasonably strong at 45.11 to 45.77. Just bear these things in mind. And you can also create the charts that I create each day by just learning the theory of the CTKS method. It's only available through ctksmethod.org and the Masterclass. Why is that? Because I invented this method. And we put the method to the test each and every day, 7 days a week. From the comments yesterday, Steady Improvement said, the more I dedicate myself to the CTKS method, the more I see how much effort and work there is in every video. Ken, are you really a human, not some AI stuff? My friend, I'm flesh and blood. And it's not only me doing these videos each and every day, 7 days a week, 365 days a year. It's my beloved wife, Kate, as well. You can see how important it is to know your levels, and I believe the best way that you can ever do anything is to learn it for yourself. Be your own financial advisor, be your own guru. I'd also like to thank Tiana for her very kind comments in yesterday's video. With the Masterclass and Everyday Update, this is the ultimate superior system for constant profitability and growth. Love and blessings to everyone. Thank you, Tiana. And Tiana makes a really good point. If you're in the Masterclass but you're not watching the daily videos, you're making a big mistake. You must watch the daily videos. They give so much value. With ADA, please note the CTKS method is experiencing or saying that there's a lot of overhead resistance above ADA's price. Please be aware of this. Thank you, FT, for your very kind comment in yesterday's video. Every day, I look for the latest news in the financial and global markets. The most relevant and comprehensive combination is Ken and Kate's video every day. The least I can do to show my commitment to learning and the Masterclass is to actively participate in the KS family. Embracing positive excellence has been probably the single best decision I have personally ever made. Ken and Kate show this every day. Not only do they lead by example, but they live and breathe positive excellence in every action. Thank you, my friend. That's very, very beautiful words. Very quickly, looking at the next 8, we can see that Matic is being very suppressed at the current time, but it's starting to break over very short-term resistance. This could be interesting. We may be buckling up on Matic, meaning that Matic could do very well, but always have your three-dimensional decision making in play because you'll need it. It's a very volatile time in the markets at the moment, and we can see Solana just matching Bitcoin's gravity. BUSD, DOT, we can see DOT just flowing in accordance with Bitcoin's gravity. Litecoin does become very light at this particular time. That's why I showed you the CTKS markup of Litecoin. And if you would like me to mark up a chart, please use that form and I will do my best. We can also see that SHIB is pretty spiky, AVAX following Bitcoin's gravity, and the DAI stablecoin doing what stablecoins do, varying around all over the place. What is next for Litecoin? If we look at Litecoin just on the naked chart, we can see Litecoin sold off quite significantly. It's going up and down and rallying all over the place and collapsing. Crypto is very volatile, but that's why we love it. We make volatility our best friend. One of the most powerful aspects of the CTKS method is to actually determine where price can slow down or reverse, and we saw a reversal around the 69.07 to 71.14 mark because there was good support inside the market, and we can see this testing of smart money buy levels and smart money sell levels. We're just currently up to a smart money sell level between 93.82 to 95.05. Understanding this objective dynamic market structure, or ODMS, is literally a license to print money, but you must trust in the lines. As a global family, we live according to the rules of positive excellence, and those rules are just these words inside these green boxes. Why do we do this? Because we want sustainable fulfillment, meaning, happiness, and success. If you're hearing and seeing this, you're amazing. Please just put the words positive excellence in the comments. I'd like to know who you are because you're showing a ton of positive excellence, persistence and commitment to be here and share this time together. Have a great day or night ahead, my friends, and Kate and I look forward to catching up with you again tomorrow. Bye for now.